Good morning, good morning. Wishing you a wonderful Wednesday ahead. Welcome to today's episode of Morning Wealth. We'll talk about three things. FDA recommends JnJ pause, US inflation data, and Coinbase IPO. In a shot to global vaccine progress, health authorities recommended pausing the distribution of JnJ's COVID-19 vaccine on Tuesday after 6 recipients developed cases of blood clotting. The drug maker said that it would delay the rollout of its vaccine in Europe, which had been planned for later this month. The markets were muted overall on the news, driven by investors' uncertainty as to how the reported events might affect vaccine hesitancy or potentially delay further economic reopening. As of April 13th, more than 36% of the US population had been given at least one dose of the COVID-19 vaccine. This is according to Wall Street. It was a big day for healthcare trading overall. Shares of Johnson & Johnson lost just 1% on the day, but shares of vaccine competitor Moderna closed up over 7%. Shares of Novavax closed up over 10%, while shares of Pfizer rose less than 1%. Outside of vaccines, shares of oncology company Novocure flew as high as 65% on Tuesday after the company gave a positive update on its phase 3 trial in a non-small cell lung cancer. The overall uncertainty in the market led to mixed performance across the major indices. The S&P 500 was up 0.33%, the Dow was down 0.2%, while the Nasdaq was up 1.05%. A slew of bank earnings coming this week, including JP Morgan Goldman, will give Wall Street a gauge of how corporate America has fared this year. The outcome, along with additional forthcoming macroeconomic data, is likely to dictate how the markets move for the remainder of the week. Yesterday, we saw the US consumer prices data come through. US consumer prices rose sharply in March as the economic recovery gained momentum, marking the start of an expected month-long pickup in inflation pressures. Some of the price increases reflect temporary factors, but others show how demand for many goods and services is reviving a year after the coronavirus pandemic shut down large swaths of the economy. The Labor Department reported Tuesday that its consumer price index, which measures what consumers pay every day, including for groceries, clothing, recreational activities, and vehicles, jumped 2.6% in the year ended March, the biggest 12-month increase since August 2018, and rose a seasonally adjusted 0.6% in March from February. Nearly half of the monthly increase was due to a 9.1% jump in gasoline prices, which have climbed partly due to production problems following severe winter storms. The so-called core CPI, which excludes the often volatile categories of food and energy, climbed 1.6% over the prior year and was up 0.3% in March from February. Services prices, excluding energy, rose 0.4% in March from Feb, the fastest monthly pace since July 2020 as the country's recovery from initial COVID-19 impact took off. Prices for hotels, car rentals, airfare, and admission to sporting events were all up in March. The data was pretty much in line with expectations, and hence the bond market, the 10-year yields actually ticked down to 1.62 from 1.67 on Monday. So yields lower, technology higher was what happened yesterday. Bitcoin traded above 63,000 at a record. Coinbase, the largest US cryptocurrency exchange, is planning to go public on Wednesday. The Nasdaq set a reference price of $250 for the direct listing of Coinbase. The company, which runs the largest US exchange for Bitcoin and other digital currencies, could achieve a bigger market capitalization than any of the world's traditional exchange operators. Based on the price of Coinbase shares in private market trading earlier this year, the company was worth about $91.5 billion on a fully diluted basis. And Coinbase reached that valuation even before releasing blowout results for the first quarter, when it benefited from a huge rally in the price of Bitcoin. During the first 3 months of 2021, Coinbase attracted 13 million new users and estimated it generated earnings of about 730 million to 800 million on revenue of about 1.8 billion. Even at the lower end of that earnings range, that was more than twice its profit for all of last year. Coinbase is valued at nearly 90 times its trailing 12-month earnings based on the lower end of its first quarter estimate. By comparison, Intercontinental Exchange, the owner of New York Stock Exchange, has a multiple of about 31, while Nasdaq is trading at about 27 times its trailing 12-month earnings. Coinbase makes money by collecting fees when its users buy or sell cryptocurrencies. Although it does not place bets on Bitcoin directly, the company's share price could suffer if Bitcoin crashes, leading to a slump in its trading volumes. Last year, 96% of Coinbase's net revenue came from transaction fees. The company charges a hefty fees compared to other crypto exchanges. A small investor looking to buy $100 of Bitcoin at the prevailing market price could pay about $3.49 in fees on Coinbase, and potentially more with more payment methods like debit cards, credit cards, etc. At Kraken, a rival exchange, the same investor would pay $1.5. At Bitstamp, another competitor, the cost would be only 50 cents. So lots happening on that space, but this is a big IPO by any standards, so something that we'll have to look forward to. That's the update. Stay safe and healthy, and I'll speak to you tomorrow.